A. Balasubramanian, CEO of Aditya Birla Sun Life AMC, a man who's seen multiple such cycles, joins us right now on the phone line. Bala, really appreciate you taking the time out and joining in. The first mode should be to give the right advice to people, and therefore I seek your advice about whether there is a possibility that because of the global ramifications, a market like India, which has already corrected 10-11%, can correct more. Is that a strong possibility?
I think it looks doubtful for one reason, that the Indian market corrected ahead of time, this time on the back of one currency movement, and second is the oil price and impact. Third, of course, the domestic issues, which I think came ahead of the current fall that we are seeing in the U.S. So therefore, the Indian market has corrected quite a lot. I think close to about 6 to 7% correction. It is quite sharp correction. If I can add up the correction that came actually in the mid and small cap space, I think index has fallen much more than what is being seen actually in the index of 34,000. Therefore, the current fall that we are seeing in the U.S., while it does pose some threat of global market sell-off in equity if it remains like this for some time, from an Indian market point of view, I would assume the impact would be the least, given the fact that the last few weeks, a lot of steps are being taken. One, to bring in stability on the currency, and second, bring in stability on the liquidity, and third is finding a solution for ILFs, which the government has intervened, and they're also taking a lot of steps in order to ensure that the organization doesn't fail. So this thing also should actually act as a soothing factor for the broad market, especially for India when the U.S. market is falling.
Right. Okay, Bala, the second part would be that we've had divergence within the large cap and the mid cap and the small cap indices, which has been the highest since at least calendar year 04. I mean, we have data from 2004 because that's the extent to which the terminal goes back to. Do you believe that if the pressures because of the global market sustain, while the large caps may not fall as much, the mid caps and the small caps, which have already fallen or at 35-odd%, is there room for that space to correct further?
I think the way to look at it is there are certain sectors that outperform the market with a significant margin due to the global factors as well as the exports-driven impact that they all are enjoying in terms of currency depreciation. And we will see some kind of switch happening from one sector to other sectors within the large cap. And even the domestic, if you look at the NBFCs versus the traditional banking, I think was going out of radar for quite some time due to the growing segment of NBFC's business. The last few weeks of NBFCs having now facing this the current liquidity issues, I think I would assume that some bit of shift will happen towards the banking because they are of course are capable in terms of bringing up the lending growth. Therefore, we'll see some kind of switch happening from one sector to other sector. But I think mid and small cap having corrected quite a lot. I think it's the time to look at companies that can perform not just near term, but to perform over longer term and apply the stock picking opportunities that provides in the mid and small cap space. If we have the fund house that we are currently looking at in this kind of fall, what could potentially be bought purely on the basis of medium to long term outlook, and have them part of the portfolio rather than getting worried about the current fall in some of the stocks.
Do you see the Q2 earnings being a silver lining in the near term, Bala?
Yeah, I think the December quarter numbers should still be better than what the analyst expectations are. Anyway, the festival season is coming, and therefore that should actually lead to an increase in spending. Even the September quarter was the biggest silver lining for Indian market. Most of the companies, either part of the Nifty or part of the broad indices, the number of companies would outperform the analyst expectations were pretty high. So therefore, I would assume that trend will continue in December. But having said that, I will have to see beyond December, given the fact that there will be some element of slowdown in the economic growth due to the NBFCs going for reduction in the overall lending growth, which they have witnessed last few years. I only hope that that will be completely taken over by the banking system, therefore the growth doesn't get impacted.
Right, but the commentary around making sure that NBFCs have enough liquidity to, lend out further so that growth is still supported, is that something that's enough to keep to soothe nerves?
Yeah, I think it definitely gives a comfort. There's no doubt. But I think one thing is definitely there is some bit of increase in cost of borrowing, and second is last 4-5 years the rate of growth for non-banking financial services have been in the range of 30 to 35%, even 40% kind of rate of growth. And obviously, given the fact today's the priority is actually to keep more liquidity rather, and ensure they are able to meet all their obligations. So that comes at the cost of growth. That comes at the cost of margin. Therefore, one has to give time of about 3-4 months for the system to get settled down.
Bala, one final question from my end. Is there a case for India, which is currently trading within this 16 to 18 times earnings band, which has been the historical average, to trade a notch lower if the US inflation moves up at a heightened pace than what is anticipated right now, and therefore calls for a quickened pace of rate hikes from the US Fed, and if indeed the other factors like the currency and crude oil don't ease off anytime soon?
Yes, I think of course the P multiple is the function of various things. I think while one could expect the P multiple to correct, at the same time the overall growth expectations, if it stays anywhere between 7.5% to 8%, and given the fact that while we don't talk about the inclusive growth, I think India is a great country from the inclusive growth perspective. And what the efforts the government has been putting in the last 3-4 years ultimately has to start delivering in ensuring that we get one inclusive growth within India, and second, that helps in terms of insulating us from the rest of the global market. And third is if there is a fall in the global market sentiment, one should also expect the oil prices doesn't stay at high level for too long. Therefore, that benefit also eventually should start accruing it maybe in 2019 or so. So in the short term, yes, there will be some volatility. Another good thing is the last few months rather, FIIs have been the single largest seller. Therefore, the money moving out from FIIs probably could be relatively less compared to normally what we've seen in these kind of times in the past.
Got that. Bala, just one last question before we let you go. At this current juncture, everyone's talking about looking at only mainly the quality large cap names, while the mid caps and small caps have actually corrected 30 to 40%, which is actually a dichotomy to 2017, where the gainers were small caps and mid caps and the losers were large caps. What would your strategy be?
I think at this point of time, given the fact that the broad market has performed quite well, and also the small and mid-cap companies have fallen quite significantly for a variety of reasons. But I think at this point of time, we feel it provides a greater opportunity for money managers to look at stock-specific opportunities in the small cap space and have them as part of their core portfolio. And these stocks have fallen for even due to the increased participation which came from HNIs in the last few years, including the PMS. I think all of them actually now having taken a hit, and they all have sold up quite significantly. Therefore, we are assuming that I think the sell-off that has come in this space, it probably provides an opportunity for money managers to look for stock-specific opportunities.
All right, Bala, appreciate you taking out the time. Thanks so very much for sharing your views and thoughts here on the show on this important day where the Nifty still loses about 2.7%.
Yeah, just before we thank, the common thread from all the three experts who've joined in.
Don't panic.
Don't panic, and we might not fall too soon, or too much rather. Let's see, for now about 3% for almost all of the key benchmark indices, slightly less than 3%. Let's take a break. We've done a lot of market conversations, talk about earnings on the other side, decode the September quarter numbers for Zee Entertainment with the management. Puneet Goenka will be speaking to us, and then talk about the earnings expectations from, well, corporate India this time around with Gautam Duggar of Motilal Oswal Financial Services.